Most consulting firm CEOs are losing money because of good intentions, but they're executed without financial clarity, strategy, or control. You see, cash doesn't just disappear in your consulting firm. Absolutely not. It is redirected through patterns and behaviors and habits that go unexamined and undisciplined over time. You see, I want you to open up your bank account like literally right now. If the number does not reflect the level of effort your consulting firm is producing, guess what? There is a leak somewhere. And you see, most high earning consulting firms have cash flow problems because of the CEO's undisciplined and unexamined money habits. So what are some of those undisciplined and unexamined but good intentions money habits? Well, I'm going to identify those and I'm going to show you how to fix them. Welcome back to the Say Yes to Profits podcast, the place to be for consulting firm CEOs that are ready to convert their revenue into consistent cash flow and predictable profitability. I am your host, Dr. Octavia Conner, CEO of Say Yes to Profits, an accounting firm that provides virtual CFO and bookkeeping services to established consulting firms. Please be sure to hit the subscribe and follow buttons right now so that you don't miss any of our episodes. Now, for this particular episode, I want to give you 5 undisciplined and unexamined money habits that could be hurting your cash flow. But I want to start with a little story to really paint that picture, okay? So I had a consulting firm CEO that came to me after what she thought was her most successful quarter. Like literally, revenue had hit an all-time high. And she was in a moment very excited. Like her team had delivered multiple large projects. And from a growth perspective, you all, everything looked amazing. But that moment of excitement lasted but just a short time. Like instead of feeling overall confident, she felt pressure. And her first question to me was, why does it still feel like I cannot breathe financially? Right? So during our discovery session, we ran the reality gap test that I do with everyone that books a discovery session with me. Why? Because the reality gap test is going to provide some key eye-opening things that whether you go with us or not for your virtual CFO and bookkeeping services, you'll at least know some of the things that are hurting your business. Well, let me tell you, for her firm, she absolutely had generated substantial revenue for that quarter. Like that was the best quarter over the last, 15, 16 quarters in her business when we began to look back. But even though she had generated substantial revenue, her cash position, you all, had barely increased, right? And that was because of a series of normalized good intentions habits, money habits that was hurting her business. You see, she had layered on new software tools for convenience without evaluating current and overtime usage. Okay. She had expanded her team quickly to get ahead of the confirmed demand. So when I say confirmed, I mean she had signed projects, okay, signed agreements, and she hired to get ahead of that because she knew that was going to be high demand. Good, but not executed the right way, okay? She allowed her client scopes to stretch without revisiting pricing, especially as it pertained to the extra hours that she was putting in as the CEO. But at the same time, she was putting in all of those extra hours, but she wasn't billing the clients. She also reinvested quickly. So after each deposit, without assessing the current and future cash reserve and cash flow, she invested the money really quickly. Good intentions, executed wrong. And here's the thing. Every decision made sense to her in that moment. Like we deep dive in them. I asked her, why did she make those decisions? She gave me the information as to why, and it made sense. And it felt right. And it felt like growth. But here's the thing. Collectively, okay, those habits created pressure on her cash flow. Like she was building a larger business, okay, a very larger business, but not a solid one. So naturally, after identifying the reality gap, she began to work with us as her virtual CFO. Like that was the obvious choice, if I say so myself. But once we slow down her decision making and introduce financial structure and financial visibility and forward focused financial discipline, everything changed. And like literally within a few months, her business not only grew its top line, right? Its revenue, but it also became financially stable and cash flow positive and profitable. And for the first time, according to her, she finally had financial breathing room. And so what I want to do is walk you through what happened with her and help you identify if you're going through this so that you can see if you have some of these good intentions, but unexamined money habits that could be hurting your business. So the first thing that we did was implemented spending with profitability filters. Okay, so every dollar leaving your business must have a job. If you've been following me for some time, you know that I say that a lot. Give every dollar a purpose, okay? This is standard, right? And so we implemented a profitability filter where no expense was approved without answering 3 key questions. Number 1, does this directly support revenue growth? Number 2, does this improve operational efficiency? And number 3, does this increase or protect profitability? Okay. If the answers was unclear, the expense was paused, period. Right. And this immediately eliminated, okay, reactive spending. So no more hiring contractors without defined financial outcomes. Okay. More about that later, right? No more convenience-based decisions. And we also categorize expenses into 3 key categories: essential, growth, and optional. And we made decisions from there. Now, here's the thing. This gave her clear financial visibility into what was required to operate versus what was discretionary. All right. What this also did was created the ultimate financial discipline. And here's the thing. Financial discipline is what protects your cash flow and profitability. So let me know if you have any type of financial discipline in your business right now. Okay. So that was the first thing. The second thing, we stop over delivering. Get this. We stop over delivering without financial boundaries. See, we identified that a significant amount of profit was being lost in delivery and not sales. So we restructured how she approached client work. So first and foremost, we define clear scope boundaries for every service. Okay. What this included, right? What this didn't include. Okay. And what triggers additional billing. That was the first thing. Second thing, we calculated the true delivery cost. This is where a lot of consulting firms CEO get caught up. The delivery cost that's taking a lot out of their company, and then they don't have enough gross profit left to cover the everyday operating expenses. And so when we calculated the true delivery cost, this included team's time, this included the CEO involvement, the tools, and the operational overhead. All right. Now, the operational overhead was after identifying the direct costs, and that was the everyday operating expenses. Okay. Number 3, we aligned pricing with cost structure to ensure healthy margins. So we also implemented a simple rule, right? If the scope expands, the price adjusts as well, period. No exception. And we position it inside of the scope and enable her to talk about this with her client so that they wasn't surprised if they happen to ask for something extra. Now, this allowed her to maintain a high quality service without sacrificing profitability. And everybody was happy. Okay, so that was number 2. Number 3, we began hiring based on a financial forecast. So before working together, hiring decisions were driven by pressure, right? When things felt overwhelmed, when things felt like just entirely too much for her and the team, the response was adding more people. Does that sound familiar? Do you do the same thing? Well, we replaced that with a forecast-driven hiring strategy. And so every hire had to be supported by projected revenue, expected utilization, and a clear return on the investment. Now, once we did that, we mapped out when the business could profitably afford to hire, how long it would take for that hire to become profitable, and what revenue targets needed to be maintained to sustain that role at a level of profitability. A lot of profit in there, right? Because that's what it's all about. Profit is how you keep scoring business. Now, here's what happened. This prevented premature hiring and ensured that every additional team member strengthened the business's financials instead of straining it. And here's a little bit of truth for you. Hiring too early, hiring without financial clarity, hiring without a profitability plan is one of the fastest ways to create cash flow leaks in your consulting firm. Why? Because hiring and your payroll costs, your direct labor, your wages is often one of the largest expense that most consulting firms have. And if you're not watching it closely, you are carrying oftentimes fixed expenses that your revenue is not consistently supporting. And so over time, that pressure shows up in your cash flow. This is why I created the Profit Leak Diagnostic. The Profit Leak Diagnostic will help you identify if hiring is currently draining your cash flow. It's going to help you identify how much is actually costing you and what is needed to shift to fix to where you're able to hire, but it doesn't hurt you. Okay. So to take the Profit Leak Diagnostic, you want to click the link in the description. And again, it's going to uncover exactly where your business is losing money and why. All right. So take the Profit Leak Diagnostic today. So the 4th thing that we did was stop ignoring small expenses that accumulated over time. So as soon as we began working together as her virtual CFO firm, we conducted a full expense audit. And we do this for all of our CFO clients. Here's the thing. We found what most consulting firms miss. It was a list, okay, of small reoccurring expenses that literally no longer was needed. They no longer was necessary. They no longer delivered value, right? So for example, there were subscriptions that were not being used. There were tools that were overlapping in functionality. There were services that were added during the growth phase, but never reevaluated, but still paying for it. There were memberships that was no longer needed or used. There were individual expenses that piled up and felt significantly at the time, but collectively they were draining literally thousands of dollars every single month. And so you all know what we did. We eliminated, we consolidated, and some of them we renegotiated. Okay. Now we implemented also a quarterly expense review process to ensure that every expense continued to earn its place in the business. Period. All right. So that was number 4. Now, number 5, we began operating with the ultimate financial visibility at all times. And this was one of the most important shifts. Like we literally moved her from reactive decision making to proactive financial planning, right? So now she had real-time visibility into her cash flow, into her profits, into her margins, into her expenses, and the key financial drivers, the key metrics for her business. Like we implemented regular financial reviews so she could clearly see what was happening in her business and why. All right. We also introduced forward-looking projections. So she was not just reacting to the numbers, but she was leading them and directing them with the projections. Okay. Now, here's what this did, right? This allowed her to make decisions with the ultimate financial confidence. Like she now knew what to invest. She knew when to pull back. She knew when to scale. She knew when to hire. She knew when to let go. She knew when to increase her prices and so much more. Like this level of financial clarity, this level of financial control removed any and all guesswork. And here's the thing. When guesswork is removed, guess what happens? Better decisions are made. Okay. All right. So what we covered today, you all, is really simple, but it's absolutely powerful because cash flow issues in consulting firms are rarely caused by a lack of revenue. Like, you know how to bring in the money. A lot of our clients are high six-figure, 500,000, 700,000. They are high seven figures. They are on their way to multi-millions, right? And so you know how to bring in the money, but what is hurting you are the habits, right? Habits around your spending and habits around how you deliver and habits around how you hire and habits around what you ignore, as well as habits around how often you actually look at your numbers and understand your numbers. Does that make sense? Yes. You see, the CEO we discussed did not need more clients. Remember I said she started us with the highest quarter she had ever earned, right, in revenue. So she didn't even need more revenue, like the money was coming in. She needed financial structure. She needed financial visibility. She needed financial discipline to protect her cash and increase her profits. She needed financial breathing room and confidence. And those habits shift when we implemented the things that we talked about. And I didn't even touch the tip of the iceberg of everything that we implemented with her. I didn't want to make this episode too long. And so I just kind of went over some of the things, right? But once we implemented those things and more, cash became predictable, it became stable, and it became profitable. And that is what being a profiteer is all about. You see, a profiteer is a CEO who not only earns the money, but also manages their business's finances with precision, right? They manage it with intentions. They retain more of their revenue. They multiply profits and turn that into wealth. Therefore, her revenue turns into millions of dollars in profit for her and for you when you become a profiteer. And so here's a question for you, right? Are you building a bigger consulting firm, or are you building a stable, cash flow positive, profitable one? Okay. And here's the thing. Those two, they're not the same. So I want you to put stable, positive, and profitable in the comments if you're building that type of consulting firm. And if you are ready to close the gap and begin operating with financial clarity, control, and confidence, your next step is to join me for my upcoming virtual masterclass. During this masterclass, I am going deeper into how to identify your exact profit leaks, how to correct them, and how to build a consulting firm that actually retains cash and scales profitably with intentions. So click the link in the description to secure your seat today. And if this episode was helpful, please share it, please subscribe, please follow, and leave us a great review. This is Dr. Octavia Conner, and until next time, say yes to profits. Toodles. Thank you for tuning in to another episode of the Say Yes to Profits podcast. Now it is time for you to make money moves. Take action based on what you learn. Now see you on the next episode. Say yes to profits. Toodles.